Forex fam, welcome back to Forex Scope. Today, we're diving deep into AUDNZD on the 15-minute and 1-minute charts. If you're looking for actionable insights and potential trading opportunities, you're in the right place. Don't forget to hit that subscribe button and the notification bell so you never miss out on our daily analyses. Let's get straight into it. The support zone is identified in the price range from 1.14467 to 1.14431, spanning from timestamp 176-213-7900 to 176-213-9700. This region shows multiple instances of price interaction, particularly the candles around November 3, 2025, 2:45 and November 3, 2025, 3:15, where the price found a floor and attempted to rebound. The significant price action within this range, with a high of 1.1447 and a low of 1.14423 across these timestamps, suggests a cluster of buying interest that prevented further downward movement. The relatively tight clustering of these candles and the subsequent upward price movement indicate a zone where demand overwhelmed supply, marking it as a significant area of support. The presence of a substantial bearish candle followed by a bullish reversal candle within this zone further reinforces its importance as a potential turning point. This area exhibits characteristics of a prior demand zone where buyers stepped in to absorb selling pressure. The resistance zone is established between the prices of 1.14576 and 1.14518, specifically observed between timestamps 176-217-9300 and 176-218-2000. This area demonstrates a clear ceiling for the price, with several bearish candles and price rejections observed. The price range between 1.14576 and 1.14518 shows a period where sellers exerted significant control, pushing the price down from its highs. The candles within this time frame, particularly those around November 3, 2025, 14:15 and November 3, 2025, 15 o'clock, exhibit upper wicks and subsequent declines, indicating a strong supply presence. The high price reached during this period was 1.14576, while the low dipped to 1.14481, highlighting the battle between buyers and sellers in this zone. The repeated inability of the price to sustain itself above this level suggests a significant accumulation of sell orders, creating a formidable barrier to upward momentum. This zone represents an area where profit-taking or new selling entries likely occurred. This support zone is identified by a significant downward price movement that shows a clear accumulation of selling pressure, indicated by a series of bearish candles. The price tested this lower bound multiple times, specifically between the timestamps 176-218-2900 and 176-218-3020, with the lowest price reaching 1.14467 and the highest price during this period touching 1.14497. This area of consolidation and retesting suggests a level where buyers stepped in, creating a floor for the price. The cluster of candles within this tight range, especially the one with a large bearish body followed by a sharp rejection or consolidation, highlights its importance as a potential reversal or pausing point for the bearish trend. The multiple touches demonstrate a clear price action response to this level, confirming its significance as a robust support. The time span covers a period of price action where the market showed indecision after a sharp drop, trying to find a bottom. This resistance zone is defined by a period of strong upward price action followed by a clear reversal or hesitation. The price attempted to break through this upper bound multiple times, notably between the timestamps 176-217-9840 and 176-218-0560, reaching a high of 1.14576 and a low of 1.14506 during this period. The presence of significant bearish candles or strong upper wicks at these higher prices indicates that sellers were actively defending this level. The initial surge in price, indicated by a series of bullish candles, met substantial resistance, leading to a notable pullback. The repeated testing of this price area without a sustained break suggests a strong psychological or structural barrier. The accumulation of price action around this level, with multiple attempts to push higher being rejected, confirms its validity as a resistance zone. The extent of the price range and the volume of trading, implied by tick volume if available, but inferred from price action here, during these attempts further solidifies its importance. The AUD pair is currently trading around the 1.14493 mark, showing a slight bullish momentum as it attempts to push higher after interacting with a recent support zone identified between 1.14474 and 1.14467. The price action on the 1-minute chart suggests a period of consolidation and potential upward movement, with several candles exhibiting small bodies and indecisive trading. The Fibonacci retracement levels, with the lower bound at 1.14467 and the upper at 1.14576, indicate that the current price is hovering near the lower to mid-range of this significant Fibonacci zone. The Bollinger Bands on the 15-minute chart show a tightening, suggesting a potential breakout. However, the immediate resistance at 1.14576, reinforced by past price action on both timeframes, presents a challenge. The analysis of tick volume indicates moderate activity, and the previous price behavior shows a pattern of upward pushes followed by pullbacks. Considering the proximity to the Fibonacci support and the recent attempts to move higher, the immediate future might see a push towards the 1.14505 to 1.14515 levels. However, the established resistance at 1.14576, coupled with potential profit taking, could lead to a retracement back towards 1.14498 or even lower towards 1.14480 if the upside momentum falters. A sustained break above 1.14530 would then target higher resistance levels. The interplay between the identified support and resistance, along with the Fibonacci levels, suggests a trading range where short-term fluctuations are likely before a more decisive trend emerges. The current environment points to a cautious approach, with potential for small upward movements followed by consolidations or minor reversals, creating a zigzag pattern within the broader trading range. The key will be to observe how the price reacts at the 1.14505 and 1.14515 levels, as a failure to break through could signal a return to lower prices. Conversely, a strong surge past these levels could initiate a test of the upper resistance boundary.